So how do you see things playing out in the fixed income space? Maybe starting with the TPO market, the short end of the curve.
Okay, basically because of what happened last week, we saw a decrease in yields across all tenors for both bonds and T-bills. And the OMO auction by the CBN, there was a single OMO auction last week. We saw a decrease in yields from 14.6 levels to 13.39 on the long end of the curve, and from 12.6 to 12.2 on the shorter end of the curve. So the sentiment is that there will probably be a further downward trend in yields, as that's the direction that the market is going, and also because there's a reduction in the OMO auction by the CBN.
Right. And those inflation numbers, how significant do you think they are? We've seen almost a 1 percentage point decline. Many had predicted that we'll see it fall back, but I'm not sure many expected it to fall back this quickly.
Well, we saw the impact on the bond market because there was a lot of activity Friday during trading. And as a result of that, the June 19th, for example, dropped by 64 basis points. And the longer tenor, the 37s, dropped by about 18. And we'll probably see much pressure. We expect there will be much pressure on those yields even this week as trading progresses.
Right. And in the short end, though, how do you see things playing out on the shorter end of the curve? It's always difficult to call because that end tends to oscillate.
The short end is driven by market liquidity, and market liquidity is really high. There was OMO maturity of 476 billion on Thursday, and that took liquidity to over ₦1 trillion. Wow. And the CBN managed.
We didn't see another OMO.
There was only one. That was the one that was conducted on Friday that dropped the yields.
Right.
So CBN took just about 500 billion out of the market. So market is still projected to be about 500 billion up.
Right. I recall speaking to traders, and they said that before the MPC, it appeared that the central bank had slowed down a bit on its OMO auctions.
Yes,
and so as a result, many were thinking that maybe this was a sign that we could see a cut in the MPR. But that didn't happen, of course.
Yeah.
What are you reading into the OMO activity in terms of the sentiment of the CBN, in terms of where they would like yields to be?
Well, you have to understand that the OMO expense is borne by the CBN, and they're trying to bring down that cost.
Yeah.
And that's why, like I said earlier on, you see a reduction in the frequency of OMO auctions. For the past 2-3 weeks, there's only been one auction relative to the daily interventions by the central bank. So we think that probably they will stick to the one. And you will see that as long as there's liquidity in the system, you see that downward pressure on interest rates, especially at the short end of the curve.
Obviously, that will hit the banks in terms of their income from fixed income securities. Yeah. Let's move on to the foreign exchange market now and get your thoughts on where we are. Very good place where oil is, $70 a barrel.
Everybody's happy with
the foreign reserves continue to climb. Yes. The big question is whether or not we're going to see the Naira strengthening. What's your take on that?
Well, as long as the CBN is the only, the major, not supplier but buyer in the market, and they are not inclined to bring down the rates. I mean, in a free market environment, demand and supply environment, you see price, an equilibrium. But in this case, the CBN will come to the market and buy at 360. Yeah. I don't see that appreciating, except they let it go.
So it appears that they've set that as the level that they're comfortable with.
Yes.
They want to keep it there,
at
least for now.
Yeah.
Interesting.
Until that changes, Naira is going to be at 360.
But then, now that we're seeing oil at 70 and possibly it could stay there for much longer, do you think that could translate to a lot more foreign investor interest in the country? Because many have suggested that as the oil price goes, the stock market goes, because people feel that Nigeria is able to supply the dollars to pay back investors if they have to. So do you get the sense that we could see maybe a flurry of investor interest linked to the increase in the oil price?
Not necessarily, because don't forget also that 2019 is an election year. There's still that precaution. So even if people are coming in, they're looking at maybe 6 to 9 months window. I don't see that rush. Maybe in the Eurobond market, but not in our local market.
Right.